This list of UK dividend stocks is from a website called Dividend Power. Fantastic website, loads of information on it. But this is a list that they created of the top 10 UK high yield dividend aristocrats. This is of 2021, but the 2022 list is also out. So what I'm going to do is, in my portfolio, I've created the 2021, that's this list. Now the list on Dividend Power includes WM Morrison's, which I actually cannot get on Trading 212 at the moment. Either that or I can't find it. But this is 9 of the 10 UK dividend aristocrats of 2021. And what I'm going to do is keep each year as a separate pie. It's basically just this basket of stocks. And when I make the 2022 version of this, I'm just going to keep this 2021 version and keep them going. And what I'll do is, if down the line there's a certain amount, like a limit of pies that I can get on Trading 212, I will just remove any of these stocks who have fallen off the list. I will keep the ones that still qualify for this list in every year's portfolio going forward. So let's say British American Tobacco, it stays in this group for the next 10 years. It means that every time I invest into this pie, British American Tobacco will get some. But if BAE Systems falls out of this list, I'll just remove it from this year's pie and it will not go forward into the next one. That's just my own strategy, but these are some of the best dividend stocks from the UK. And at the moment, because the UK is financially struggling and there's a bit of political turmoil at the moment, well, there's all kinds of turmoil, but a lot of these have dipped pretty severely in the last couple of days. The pound has lost, I think, 30% of its purchasing power, so things are very spicy at the moment. And the criteria for this list is that they've paid dividends for 10 or more years. None of them have a dividend yield over 10%, because that's a little bit too spicy. And they have a £1 billion market cap. So they're in no particular order, but I'm just going to go from the top down and break them down very quickly, one by one. Number 1 is British American Tobacco. Ticker symbol is BATS. Currently trading for £32.78 per share. Pays a dividend 4 times per year, and the last one I received was for 54.45 pence per share. Now this is a large company. It was founded in 1902, and as you can probably imagine, they sell tobacco, nicotine products and vaping products. And I've just read a little bit that they've recently invested 37 million into a German cannabis company. So I think they're starting to branch out into that. But it's essentially tobacco and tobacco smoking products. And they sell their products in the USA, the Asia Pacific, the Middle East, the Americas, Sub-Saharan Africa, Europe and North Africa. It also has modern oral products, which are white in colour and contain nicotine, water and other food grade ingredients. So it's quite a large company. It's got 52,000 employees and it's in the consumer non-cyclical sector. Has a market cap of £75.7 billion. PE ratio is 10.35. Current revenue of £25.6 billion. Has an earnings per share of £3.30 and a nice dividend yield of 6.44%. And it does pay 4 times a year, which is quite not rare, but it's not particularly common for UK stocks. Their annual profit margin is 26%, which is good. And over the last quarter is 15%, which is still good. Not great, but still not in the red. Their annual debt to assets ratio is 51%, which is pretty good. And over the last quarter is about the same. And their annual cash flow from operating is £9.7 billion. From investing is negative £1.14 billion. And from financing is negative £8.75 billion. The long-term graph is exactly what you want to see out of a dividend growth stock. Now it's earned its place in this list, no doubt. Very nice. A lot of strong growth, and a quick look at the dividend history shows that the dividend it used to be paid twice a year and it's been growing a little bit every year, and now they pay 4 times a year, which is even better. But it has a 52-week high of £36.45 and a 52-week low of £25.07 per share. So a very quick look at the history of the dividends, and it's what you'd like to see. A little bit of growth, nothing too outrageous, just nice little bumps up every year, and this is when it used to pay twice a year. Usually stocks that pay twice a year will have an interim payment and then a final payment, but quarterly means 4 times per year. So it's what you like to see. It has earned its place in this list, no doubt, and I just checked, it's also in the Dividend Aristocrats of 2022 list as well. So it's doing very well. Number 2 is BAE Systems. Ticker symbol is BA. It's currently trading for £8.09 per share. Pays a dividend twice per year, and the last two I received were for 9.9 pence and 15.2 pence per share. So BAE Systems is in the aerospace and defense industry, and it's a defense, aerospace and security company that has 5 segments, and these are the electronic system segment, cyber and intelligence, platforms and services, air segment, and maritime segment. So the electronic systems segment is in the USA and the UK. The cyber and intelligence segment is also in the USA and UK, and this covers the company's cyber, secure government, and commercial and financial security activities. The platforms and services segment operates in the US, the UK, and Sweden, and this provides combat vehicles, weapons, and munitions. The air segment is based in the UK, but it's comprised of air activities for European and international markets, and also a US program, and it has businesses in Saudi Arabia and Australia, and it also has an interest in MBDA Holdings. The maritime segment is also based in the UK, and it's for maritime and land activities. So despite the turmoil in the UK at the moment, BAE Systems is actually doing very well, because it's an unfortunate fact that when war is rampant, then defense and aerospace companies tend to be selling a lot of products and therefore making a lot of profits. So it's in the capital goods sector, currently has 91,000 employees, has a market cap of £24.9 billion, a PE ratio of 19.27, current revenue of £19.5 billion, an earnings per share of 40 pence, and a dividend yield of about 3%, paying a dividend twice per year. Over the last year, their profit margin is about 9%, and over the last quarter, it's about 6%. Their debt to assets ratio over the last year is 72%, which is not the best, and over the last quarter is 62%. And their annual cash flow from operating is about £2.5 billion, from investing is £66 million, and from financing is negative £2.26 billion. So it says here that the company was founded in 1999, but this stock price goes back to 1998, so never seen that before. But this is yet another very nice graph for a long-term dividend growth stock. So it's actually at close to the highest it's been in history, doing very well. It's unfortunate circumstances as to why, but the fact of the matter is that they are close to the best price they've ever been at. So it has a 52-week high of £8.47 and a 52-week low of £5.17. Going back through the dividend history, this goes back to 2006, and it appears that for a space of 3 years they paid a dividend once per year, and it went up slightly every time, and then they moved into paying twice per year. The first year that they paid a dividend 2 times was 2011, and that was for 7.5 pence and 10.5 pence per share. And here we can see 8 and 11 in 2013. 2014 was 8 pence and 12 pence, and it is slowly growing bit by bit. Not too much, but not too little. It's what you like to see out of a dividend stock. Number 3 is GlaxoSmithKline. Ticker symbol is GSK. It's currently trading for £13.17 per share. Pays a dividend 4 times per year, and the last one I received was for 14 pence per share. So GlaxoSmithKline is a biotech company, biotech and healthcare, and it makes vaccines and specialty medicines to prevent and treat disease. The 2 segments of the business are commercial operations and research and development. So they're involved in cancer medications. They have a portfolio of about 20 different vaccines that they produce. They have specialty medicines, and they include for immune-mediated conditions. They also have general medicines, which include inhaled medicines for asthma and for chronic obstructive pulmonary disease, and they also do antibiotics and medicines for skin diseases. And GlaxoSmithKline has a global network of about 12 vaccine manufacturing sites. So at the moment they have about 90,000 employees. Their current market cap is £53.5 billion. They have a PE ratio of 12.07, current revenue of £34.1 billion, earnings per share of £1.10, and a nice dividend yield of 7.12%. Over the last year, their profit margin is close to 13%, And over the last quarter is about 12%, so it's not bad, still in the green. Over the last year, their debt to assets ratio is 80%, which is not great. And over the last quarter is 81%. And their annual cash flow from operating is £7.95 billion, from investing is negative £1.78 billion, and from financing is negative £7.5 billion. So this is yet another very nice long-term graph to see. It seems to be very stable in the last close to 20 years. But it's what you want to see yet again from a long-term dividend stock. Nothing too outrageous, and it seems to be very stable around the area that it's in now over the last 20 years. So it has a 52-week high of £34.08 per share and a 52-week low of £12.80 per share. And the dividend history. They're a quarterly paying stock, and the dividend payments seem to vary a little bit. You know, they're not paying the exact same amount every single time, but that's generally, as usual, it depends on the profits of the company. But it seems to be quite stable. You know, it's maybe not maybe the dividend isn't growing as much as you might like, but it is a massive company. It's in a crucial sector, which is healthcare, and it pays a dividend 4 times per year, which is not unheard of, but pretty uncommon for UK dividend stocks. Next, we have Admiral Group. Ticker symbol is ADM. Currently trading for £19.23 per share. Pays a dividend 4 times per year. The last ordinary dividend I received was for 42 pence per share. And the last bonus dividend I received was for 75.8 pence per share. Now, bonus dividend is just like an extra dividend. If they're particularly profitable, they might pay a bonus dividend some quarters. So Admiral Group is a UK-based financial services company, and they're involved in insurance. So that's insurance for your home, for your car, for traveling, or for your pets. And they also have a personal lending product through Admiral Loans. So the segments of the company are UK Insurance, International Insurance, Admiral Loans, and Other. And the Other segment includes Compare.com, which is the US comparison business, and Admiral Pioneer, which is an entity that was created in order to seed and grow new businesses in order to diversify Admiral Group a little bit more. So they currently have close to 11,000 employees. Their current market cap is close to £6 billion. It's £5.93 billion. PE ratio is 8.73. Current revenue of £1.5 billion. An earnings per share of £2.30. And a healthy dividend yield of 4.37%. Now, there was no information given on their profit margin, just the net income, which was close to £1 billion over the last year. And over the last quarter, it was about £200 million. Over the last year, their debt to assets ratio is 83%, which is not great. And over the last quarter is 86%, which is also not great. And their annual cash flow from operating is £203 million. From investing is £387.8 million, and from financing is negative £564 million. On the long-term graph, it's another one that's looking very nice. You can see the kind of running theme with all of these stocks is that they have nice long-term growth. The spike here is 2021. That's where it was £36 per share. That seems to be the highest peak. This graph goes back to 2004, and the company was founded in 1993, so it's a pretty good long-term scale. But it's exactly what you want to see out of a long-term dividend stock. Has a 52-week high of £33 per share and a 52-week low of £16.91 per share. And the dividend history goes back to 2006, and it appears that they would pay 1 or 2 dividends back then, and then in 2009 they seem to have started to pay 2 per year. In 2010, they started to pay twice per year. At the moment, they're now paying 4 times per year. So the numbers appear to be steadily growing, which is always nice. These special dividends are just a bonus dividend. Like, they're counted as an ordinary dividend, but just one that you weren't expecting. And now as we get closer to where we are now, we can see that in 2021, they paid 4 times, and that was for 63 pence, 22 pence, 87 pence, and 73 pence. It seems that they haven't declared that they pay every quarter, but they're paying 2 bonus dividends along with their interim and final payments, which means that they're in a position to comfortably pay 4 times per year. Next on the menu is Legal & General Group. Ticker symbol is LGEN, currently trading for £2.17 per share, pays a dividend twice per year, and the last two I received were for 5.18 pence and 13.27 pence per share. Legal and General Group is in the investment services industry, and it's a UK-based financial services provider, and it's involved in retirement, in general capital, investment, insurance, and retail. Between all of these different segments, they'll be involved in pensions, in shareholder assets, commercial real estate, clean energy, housing, small and medium enterprises. The insurance generally represents UK protection and also fintech business. There's also US retail protection business, and the retail retirement segment that represents retail products, workplace savings, and lifetime mortgage loans. Legal and General Group has close to 11,000 employees at the moment. Their current market cap is about £14 billion. Their market cap is £13.94 billion. They have a PE ratio of 7, current revenue of £44.6 billion, an earnings per share of 30 pence, and a dividend yield of 10.24%. So this company has actually gone over the threshold of this pie. So this pie of UK Dividend Aristocrats should only have yields of less than 10%, and this has just crossed over that threshold. There's no profit margin given, just a net income for the last year, which was £2.05 billion. And over the last quarter, the net income was £1.15 billion. Over the last year, their debt to assets ratio is 98%, which is not good. And over the last quarter is about the same, 97%. And their annual cash flow from operating is negative £169 million. From investing is £133 million, and from financing is negative £1.5 billion. So financially, Legal and General Group is not in a great place at the moment. So despite the bad news, it's yet another very nice long-term graph. So the company was founded in 1836. This graph goes back to 1988, where it was 22 pence per share, and it's now £2 per share. Has a 52-week high of £3.09 and a 52-week low of £2.08. So going back to 2006, we can see that they used to pay one dividend payment per year, which fluctuated quite a bit. Then they began to pay 2 times per year around 2011, and now getting closer to where we are. They're still paying twice per year, but as we can see, there's always quite a bit of variation between the two payments, the interim and the final, but it is growing bit by bit. Not too much, not too little. Next we have IG Group Holdings. Ticker symbol is IGG. It's trading for £7.57 per share. Pays a dividend 2 times per year, and the last two I received were for 12.96 pence and 30.24 pence per share. IG Group Holdings is in the investment services industry, and it's a UK-based global financial technology company. So it's involved in the technology, platforms, products and exchanges for a range of trading and investment opportunities around the world. So it has the usual financial instruments that you may have heard of: leveraged derivative, exchange-traded derivatives, stock trading and investments. And it has operations in Europe, North America, Africa, the Asia Pacific and the Middle East. At the moment, they have close to 2,400 employees. They have a market cap of £3.24 billion, a PE ratio of 8.28, current revenue of £985.5 million, earnings per share of 90 pence, and a current dividend yield of 5.8%, which is quite healthy. Their annual profit margin is 51%, which is good. And over the last quarter is 42%, it's also good. Their annual debt to assets ratio is 35%, that's nice, it's very good. And over the last quarter is 37%. And their annual cash flow from operating is £712 million. From investing is negative £99 million, and from financing is negative £18.2 million. These are looking to be in a very nice financial situation at the moment. Yet again, another very nice long-term graph. This one goes back to 2005, and the company was founded in 1974. And as you can see, it has grown quite steadily and stayed up since then. A few pretty heavy crashes, but it's recovered every time. It's doing very well. So they have a 52-week high of £8.83 and a 52-week low of £6.46. And the usual running theme that we can see that seems to be that they paid once per year up until about 2011, and then they began paying twice per year. And each of the dividend payments is growing a little bit every time. It's what you love to see. Yeah, IG Group Holdings is looking like a nice buy at the moment. Next we have Rio Tinto. Ticker symbol is RIO. Currently trading for £48.55. Pays a dividend twice per year. And the last two I received were for £1.50 and for £3.06 per share. I've also received a bonus dividend of 45.6 per share. Rio Tinto is a very popular dividend stock in the UK. So it's in the metal mining business, and it's primarily engaged in producing materials essential to human progress. So these will include iron ore, aluminium, copper, minerals, titanium, borates, gold, silver, diamond, so on and so forth. So they have a network of 17 mines and a rail network spanning about 2,000 kilometers. At the moment, they have 49,000 employees. They have a market cap of £79.86 billion, a PE ratio of 3.71, current revenue of £59.1 billion, an earnings per share of £12.90, and a nice dividend yield of 11%. That's actually quite high, which means it has gone over the 10% threshold of this pie. But fantastic company, so I'm not going to be moving it out. Over the last year, the profit margin is 33%, and over the last quarter, it's about 30%. Their annual debt to assets ratio is 50%, which is good, and over the last quarter is 50%. And their annual cash flow from operating is £25.3 billion, from investing is negative £7.16 billion, and from financing is negative £15.86 billion. On the long-term graph, you can see quite a bit of history here. This is the 2008 crash. It went from £57.5 per share down to £8 per share. Not nice at all. But the company was founded in 1873, and this goes back to 1989, so quite a bit of history. But as you can see, it is doing very well at the moment, despite the economic situation of the UK. It has a 52-week high of £63.43 and a 52-week low of £43.54. And the dividend history, as we can see, it grows a little bit as it progresses, which is exactly what you want to see out of a dividend stock. This one is very popular, and I can see why. Looking very well at the moment. And anything that's a special here is a bonus dividend. So very profitable and in a decent, well, a good financial situation. Next, we have Pheonix Group Holdings. Ticker symbol is PHNX. Currently trading for £5.22 per share. Pays a dividend twice per year. And the last one I received was for 24.8 per share. So it's another company in the insurance industry, and it operates through 4 business segments, which are UK Heritage, UK Open Europe, and Management Services. So to kind of summarize the whole lot, they're generally just in life insurance. So they have life insurance and pension products, in-force life insurance and investment policies, workplace pensions, self-invested personal pensions, and so on and so forth. They currently have 7,000, close to 8,000 employees. Their current market cap is £5.33 billion. The PE ratio is not given, which it often happens when they're losing money, which we can see by the earnings per share that they are. It is up to the company just not to report one or to give one. Current revenue is £24.09 billion. Earnings per share is negative 80p. And they have a dividend yield of 9.3%, which is quite high. The profit margin is also not given, but the net income over the last year was negative £837 million. And over the last quarter was negative £907 million. So not doing very well at the moment. Their total debt to assets is 98%, which is not great. Very bad, to be honest. Over the last quarter is the same. And their annual cash flow from operating was negative £1.1 billion. From investing is £304 million. And from financing is negative £1.09 billion. So not looking good at the moment at all. So the company was founded in 1857, and this graph goes back to 2009. We don't really get a good scale of the kind of long-term story of the stock, but judging from this, I would say, scary. Now this would be the only one I've come across in this list so far that I would be worried about putting a bit of money into. Now because my bets would be quite small, I'm going to get it to €100 or whatever pays €1 per dividend payment, and I'll leave it there for the next while. So Pheonix Group has a 52-week high of £7.04 per share and a 52-week low of £5.08 per share. So we're getting close to the 52-week low at the moment. And on the long-term dividend history, we can see that they started paying dividends twice per year around 2011. It seems to be quite common in this list, but they don't seem to be growing. For a 5-year gap, there's pretty much no growth. Tiny bit, but not much. And even up until recently, it hasn't paid significantly more than it used to. So this would be definitely the bottom of the list so far, Pheonix Group Holdings. And last but hopefully not least, we have Jupiter Fund Management. Ticker symbol is JUP, pays a dividend twice per year, and the last one I received was for 9.2 pence per share. It's currently trading for 91 pence per share. Jupiter Fund Management is in the investment services industry, and through its subsidiaries, they act as an investment manager to authorize unit trusts, to SICAVs, which is an abbreviation from French, but it just means a company whose capital and shares are not specified in advance, and the capital of the company is divided into investor shares and company shares. They're quite common in Europe. This one, ICAVs, these are Irish Collective Asset Management Vehicles, and these are similar to SICAVs, but they're regulated and they're attractive because of their kind of legal structure. These ICVCs are investment companies of varying capital, and OEICs are open-ended investment companies. So it's generally just financial instruments is the best way to sum it up. Equities, fixed income, multi-asset, and alternatives. Jupiter Fund Management offers a range of managed investment products, and these are made through mutual funds, segregated mandates, which are like exclusive funds for institutions, and investment trusts. The company's offices are in the UK, Ireland, Austria, Germany, Hong Kong, and Italy, among others. So they currently have 500 employees, a market cap of £510 million, PE ratio is 3.18, current revenue is £617.8 million, a positive earnings per share of 29 pence, and a massive dividend yield of 18.5%. So I believe they will cut this dividend or just not pay it, because 20% is a huge dividend payment, too much. Over the last year, their profit margin is 24%, and over the last quarter, it's 6%. Their annual debt to assets ratio is 32%, which is good, and over the last quarter is 40%, and their annual cash flow from operating is close to £189 million, from investing is negative £12 million, and from financing is negative £167 million. On the long-term graph, it's not really looking good for Jupiter Fund Management. So we are at 91 pence per share, and it began at £1.90 per share. So it has gone down 50% since 2010. The company itself was founded in 1985, but this graph only goes back to 2010. At the moment, it has a 52-week high of £2.70 and a 52-week low of 87 pence, 87.85. So it's getting close to the cheapest it's been in a year. And also from the dividend history, it's not great. It is growing, but it's not fantastic. It has a nice healthy bit of growth to it, but I would imagine as the profits decrease, the dividend will, which is kind of the rule of thumb. So we can't really depend on this for the current circumstances, unfortunately. So that is 9 out of the 10 stocks in the UK Dividend Aristocrats of 2021. And I was not able to find WM Morrison's, that's the 10th one. But if I had to sum it up in a single sentence, I would say Rio Tinto, or British American Tobacco would be the best ones of this list, and Pheonix Group Holdings are the worst at the moment. So I'll be making the 2022 UK Dividend Aristocrats list pretty soon. I've just made the pie for it, so I'm going to invest into that when I get paid soon. And there's 2 new companies, which are United Utilities Group and HomeServe. I don't think I have either of these. But we'll get the ball rolling on that soon enough, and I'll make a video for it, just go into these. Yeah, a lot of them are the same, so at the start of the video for this pie, I'll explain that a lot of the companies are the same, so I will probably do United Utilities Group and HomeServe first. So anybody who's new and has seen the last video, this one, they can see these two new companies and then they don't need to watch the rest. But that's all for this list, and I hope that you found this useful.